But let's get you our first corporate conversation on the show now. Polycab reported a good set of third quarter earnings. In fact, the company posted its highest ever third quarter revenue. It has also reported a healthy growth on the margin front compared to last year. So to discuss the quarter gone by as well as the outlook going forward, we're joined by Inder Jaisinghani, who's chairman and MD, as well as Gandharv Tongia, ED and CFO of the company. Gentlemen, good morning. Thank you very much for joining us. This is Pavitra. And Mr. Jaisinghani, if I can come to you first, like I was pointing out, the revenue growth has been quite good for this quarter. It's around 10% higher for this quarter. Can you tell us what you see for the full year, that is for all of FY23? And also, what is the volume growth that you've seen in Q3, if you can put that out for us?
Q3, our volume growth was more than 15%. And it is going good continuously. And I think so even fourth quarter we are going to do good.
Okay, and what is the kind of revenue that you would expect for the full year then?
Yeah, we are thinking at least 20% growth from the last year.
Okay, 20% growth over the last year. That's for FY23, I assume. Mr. Tongia, come in on this. It's been a very good quarter. So if you can break it up for us in terms of different segments. If there's a 20% growth in FY23, what is the outlook for FY24 and which are the segments you think could lead you to that 20% plus growth?
Thank you for having us. We embarked on transformation program Project Leap around 1.5 years back, and in that period, we had access to FY21 numbers. We exited FY21 at 9,000 crore rupees, and we decided that we have to target 20,000 crore rupees by FY26. And that is what we are doing. From 9,000 crore, we moved to 12,000 crore in FY22. In the current 9 months, we have almost done 10,000 crore rupees, and we are hoping that we would continue with this momentum. The momentum would be contributed significantly by cable and wire business, where we have market leadership position, almost 24% of market share. And FMEG business, which contributes almost 10%, is also going to register a fair amount of growth. So growth will come from both the business, cable and wire, as well as FMEG.
In the FMEG business, since you're saying growth will come from there, purely if you go by what you did in this quarter, there was barely any growth. I mean, in the top line, same time last year, you did about 340 crores, and this year it was absolutely the same, I think 342 crores. So there's no growth in FMEG year on year. And even on the EBIT side, the margins have actually fallen. So what makes you so confident that the FMEG business will, get back to a growth trajectory? And if yes, particularly for that business, what kind of growth are you looking at?
You are right. We are already a 1,000 crore franchisee FMEG business. As part of Project Leap, we realized that we have to carry out certain course correction, which is what are being done in the current fiscal. And on the strength of that, we believe that from next fiscal onwards, we should be able to register a fair amount of growth. We believe the growth would be significantly better than the industry average growth. And that is how FMEG will contribute significantly to this 20,000 crore ambition, which we have for fiscal 26.
FMEG restructuring, the course correction is largely complete and it should start driving growth for you significantly in FY24. Mr. Jaisinghani, talking about the cables and wire business, where you all said that you have leadership position. Just purely in Q3, you had a revenue growth of about 11.5% in cables and wires. But your peer, Havells, had a near 17% revenue growth year on year. Could you give us an indication of whether just in the near term, did you lose market share? And also, if you could talk a little bit about your margins. Margins expanded. Is this the new base to work with? Can margins improve from current levels? Go ahead, sir.
Margins are always going to remain 11 to 13% in the cable and wire business. But our business is going to grow because demand is good and we are increasing capacity and continuously that demand is coming. So I think so. This overall year, our growth will be very good in the cables and wires also.
And overall margins?
Yeah, margin will remain within 11 to 13%. Yeah.
No, this is cables and wires margins or overall consolidated margins?
Cables and wire margin.
And on a consolidated basis, sir?
Consolidated basis will be around about 11%.
Okay. And if you could tell us about your peer, Havells, having reported higher growth in the cables and wires business in the current quarter?
No, it will remain the same, I think so. It is not much difference.
All right, that is on the margin front. Mr. Tongia, if I can come to you on the exports, I think for the 9 months of this year that have already come through, your exports are up around 30%. Your export contribution has also gone up, right? Last time we spoke, you said it's at around 10%. Can you tell us what is the kind of revenue growth you expect from exports? And is there any kind of trouble that you're seeing in global markets?
Exports is going to drive our top line growth in years to come. We believe exports should contribute at least 10 to 12% to our top line. As I had mentioned last quarter, that every quarter we are trying to add additional geographies. We have now significant presence in developed countries like US and Australia, and we are continuing with our efforts in identifying additional geographies. My sense is in the current quarter, which is the fourth quarter, we should be able to up the exports contribution, and we should exit the year between 8 to 10% of top line.
But you should be able to up the export contribution to how much? It's at 10% right now.
Yes, almost 8% if I take 9 months as a base, and my sense is the fourth quarter we would be able to improve the contribution, and we should exit anywhere between 8 to 10% by March of 24.
Okay, 8 to 10%. I have to ask you a slightly larger question, Mr. Tongia. I was going through a Kotak report where they did a channel check about the industry itself, and they found that there's a sharp drop in discretionary demand. Perhaps it's also because of normalizing of pent-up demand. There's inflation, which is hitting household incomes as well. And, there is no expectation of a rapid turnaround in demand. Is that your sense too, that there is some slowdown visible, and could that put any hindrance to your 20,000 crore FY26 target on the top line?
So if we were to talk about only cable and wire business, I don't think there is any hindrance. We have a very active and strong demand. The private capex has improved. The government capex of 7.5 lakh crore, which was committed in budget, almost 60% of that has already been incurred by the government. The listed companies' capex commitment has improved. So we are seeing very strong traction as far as demand is concerned, whether it's coming from government, private, or real estate. On FMEG, there were a few pockets where there was some softness which was felt, but I don't think that's going to continue. And we are extremely confident on achieving 20,000 crore rupees of top line by fiscal 26.
Okay. Mr. Tongia, correct me if I'm wrong, but I remember post Q2 you had indicated margins of 11 to 15%. Are you bringing down your margin guidance, saying it's going to be at the lower end now?
So cable and wire, we have two product categories. One is cable, where the margin is generally around 11%, and wires, where the margin is generally around 15%. On blended basis, generally it is between 11 to 13% at the cable and wire business level. Okay. So your recollection is right, that we are continuing with 11 to 13% of EBITDA margin. As far as FMEG is concerned, if you remember, I had mentioned that between this year and FY26, our EBITDA margin will go up right to 10%. And because of that, the consolidated margin would improve slightly. And it would be hovering around 13% or thereabout in years to come.
So you're saying that there is no slowdown that you're seeing even in the B2C segment, because that's something that Havels has indicated to us as well, that the B2C segment is undergoing a bit of a slowdown. You're not facing any of that?
In cable and wire, there is no softness which we are witnessing. In FMEG, there are a few pockets where we have witnessed some softness, but this is not of permanent nature, and we don't expect that it would negatively impact our ambition of 20,000 crore rupees by FY26.
Okay, all right, we leave it at that. Thanks a lot for joining in and giving us an update, Mr. Jaisinghani and Mr. Tongia. That's Polycab. It's a market leader in the wires and cables business. It has over 20